Good afternoon, all the participants. Today is our third capital market webinar. So I welcome our speaker, Mr. Sachin Bhartiya and Mrs. Rochelle Dsouza. We have with us our chairman Murtuza Kachwala sir and our secretary CA Sweta Jain also. But before that, I will request you all to put your hand to your heart for our institute motto, please.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, Vinayji. Thank you, all the participants. Now, as our beloved and energetic chairperson, Murtuza sir is there. So I want to request you, sir, if you can say your word of wisdom, sir, please. Over to you, sir.
Thank you, Pinky. A very warm good afternoon, good evening to all the participants who joined the program today. Let me first thank Mr. Sachin Bhartiya. Sachinji, extremely grateful. Thank you very much for accepting our invitation and joining us today to share your knowledge with everyone. I also welcome Rochelle and Anshul, both. Thank you for joining us and sparing your valuable time here. We also have Akshay here. I recognize presence of WRT Secretary Sweta Jain, Regional Council Member Udesh Pankhania. Even before I get to this thing, let me first congratulate Pinky. She is the chairman for the Capital Markets Committee, and she's been like regularly organizing so many programs on capital markets and getting the best of the faculties. So extremely good work being done. And she's also planning a national conference on capital markets. So really encouraging. And in addition to that, her role at the members industry committee and so many other things. So Pinky madam, thank you very much for all the good work.
Thank you, sir. Thank you, sir, for appreciation, sir.
So friends, this year, the theme at WIRC is leap towards excellence, achievement and development. And as we all know, that like people who are in practice, like there is a pressure on the revenue streams. And in addition to a normal accounting and taxation activity, we need to, and everyone is looking at newer opportunities. And capital market is also one attractive area. What we are trying to do this year as part of a theme lead and the various 5 goals which we listed, and against the goals we listed various activities that we'll do, and we also have measurable items. But what are these new areas which people can pick up? And we are saying we are bringing a refresher course on international tax, a refresher course on valuation, insolvency, on internal risk management. So anything that a person wants to pick up and likes attractive can be done. Similarly, national conference now on capital markets and so many programs. So maybe in capital markets, you want to do equity, you want to do debt, you want to do something else, mutual funds, and there are different things we would bring to you and with the best of faculties. So updation of technical knowledge and bringing opportunities to the knowledge of the members, that is one. The second one is like a lot of work at WIRC is being done and we continuously keep on doing on the technology front. So the simplest of software like Tally, has got so many features which many of us do not use. And hence we did a 5 days course on Tally Prime. But we are also like doing something on fusion of Excel and Tableau. We're doing something on R, okay? And in R, a 4 days, 5 days coding. But we also designed longer duration course, and I just want to touch upon that. The part one of this longer duration IT course is 60 hours, and that is teaching Python coding and SQL, and for as low as 9,000 rupees fees. And this is on Saturday evening and Sunday morning. You spend 5 hours, 4 hours in the weekend, and then you get a lot of work where you can keep on doing the work in at home, and your office data also you can go, you can keep on typing and doing hands-on queries, and you can adopt this in your day-to-day life. Successfully 4 batches completed of 30 each. We kept a batch size of small of 30, and the fifth batch is going on. We're launching the 6th one. Similarly, the part 2 is on the Power BI and Tableau, which is a viewing solution. And on Power BI Tableau, again 40 hours, 6,000 rupees. And on request of our regional council members, for the CS students also, we merged both of these into a 100 hours program. And for the students, we are offering the whole 100 hours Python, SQL, Power BI, Tableau for 6,000 rupees. And I'm sure it is going to cost more than ₹1,00,000 when you go outside. So we'll keep on doing. We are also talking to Automation Anywhere or UiPath, and we're going to bring a course, certificate course on robotic process automation, RPA. So keep watching, and I would request everyone to keep joining whatever attracts you, interests you. And I think we'll need to sharpen our skills and re-skills ourselves to face the future with confidence. With that, let me stop here, and thank you everyone for joining. And thank you, Pinky, for the good work. And over to you, Pinky. Thank you.
Thank you, Murtaza sir, for your appreciation and for your cooperation in organizing all the webinars. So now I want to request Anshul Dhanuka to introduce today's speaker, Mr. C.A. Sachin Bhartiya and Ms. Rochelle. Please, over to you, Anshul.
Thank you so much, Pinky ji. Just one line about myself before I introduce in detail Sachin ji and Rochelle ji. My name is Anshul Dhanuka. I work with Kotak Bank in the debt capital market team. I'm a CA from 2012 batch. Yeah. Now, about Sachin Bhartiya ji first, I mean, what do I say? He's a very senior chartered accountant hailing from Kolkata, and he has made his name in the private equity investment circle. After spending 8 years in banking, he found his love in private equity investments landscape, which was then still evolving, and have now spent around 15 years in as a founding partner of Lighthouse Advisors, whereby he has seen the consumer segment grow very, very closely and have been able to direct very resourceful money in that space. And I mean, to understand private equity evolution as well as to understand the consumer consumption trends in India, there can be no better person than Mr. Sachin himself, and ably supported by his colleague, who is also investment officer and a managing director at Lighthouse Fund Advisors, Miss Rochelle Dsouza. Both Sachin ji and Dsouza ji collectively has been investing in marquee companies like Bikaji Foods, Nykaa, Duraflex, Fab India, Funds and Petals, Syra Sanitware, Dhanuka Agritech, Kama Ayurveda, and many more. I mean, some of these names we can relate to. We have been ourselves consumer, and hence this session from both are not only going to be an investor guidance, but also it's going to be very relatable to all of us, both as consumers and finance professionals. I would also like to point out that both Sachin ji and Rochelle has been active in social work as well. To give a glimpse of what Sachin ji has been doing, he is part of Rotary Club of Mumbai at Nariman Point, and he's also founding president of a club of 300 plus chartered accountants from Eastern India who are now settled in Bombay, named Gitanjali Club. And in his own way, he has been supporting a lot of social causes. About Rochelle ji, in her personal time, she serves as a mentor for YEA Academy, which teaches entrepreneurship to high school students, and Take Charge, which is a career guidance for young adults, and also an ambassador of WinPE. WinPE is a network for women in private equity. While private equity space has come of its age, but we will find very less number of women professionals in this space. And we are very glad to have Rochelle ji here representing the women investment professionals. And both of them cumulatively holds board positions across the companies which I have named. I think with this, I will take a pause, and over to you, Mr. Sachin and Ms. Rochelle.
Thank you so much.
Welcome.
Thanks, Mr. Chwala, Pinky, Sweta, Anshul, and everybody else, and thanks, Rochelle, for joining me as well. Actually, I am thrilled, humbled, and this is probably the first time I'm actually talking on a platform of CA Institute. Wherever I am today, whatever I have been able to achieve in life would not have been possible without the degree granted by this institute. So, when I'm talking about this, actually, I'm shivering, I must say that, and coincidentally, I did my graduation up to graduation in Hindi, and then I was able to do CA. So today, talking in front of all of you, it actually is very emotional day as well for me. And thank you for giving me this opportunity, and everybody in the audience, thank you for joining. I'll try to do justice to your time. You may have a lot of expectation. I'll try to meet your expectation, but if I miss something, I am asking your apologies in advance. And with that, I'll also take a minute and sort of talk about my colleague who is here, Rochelle. Rochelle has been working with us now for over 10 years now, and she comes from Mangalore. And, now, and she joined us actually as an associate, which is the starting career. And she has sort of grown to become the managing director, which is the top position in the firm. So, I must also sort of, explain to the aspiring people here that, this is one business that actually gives you opportunity to grow leaps and bounds, if you're willing to put in hard work. So with that, what I'm going to do is that instead of bore you to start with the PPT slide, I'm going to talk 5-7 minutes without the slide to talk about the concept of private equity, talking about concept of consumption in India and abroad, and why people like us love to invest in consumption business or consumer business. And secondly, how some of these things have evolved over the last 1.5 decade, and sort of what is our view on some of these things will evolve, how they are going to evolve over the next 20, 30, 40 years. So, we have in India parlance actually, and it makes actually my job easy. When I go abroad and when I talk about this terminology called roti kapda makan, actually, it takes a lot of efforts to explain what I'm saying. Fortunately for us, we had a blockbuster movie by name. So, one roti kapda makan as it is a very common sort of phenomena, but given the movie, people are able to correlate as well. But if you look at basically what we do, consumption is, if you ask me, in India or in any emerging economy first, it will be all about roti kapda makan. As the country starts evolving, progressing, and they migrate from developing to the developed world, it starts actually roti kapda makan plus. As you become grower, as you become more rich, as actually, in fact, make more money, you start spending more money beyond the roti kapda makan. And if you look at what are those few things, whether it's a car, it's a luxury travel, it's a holiday, and you look at your own pattern of sort of consumption 20 years back, probably when you were, those who are, let's say, I'm talking about my peers in the CA community. We started, literally, we did CA in Calcutta. And the reason we kept the name of this group Gitanjali is that most of the people came by train. That was the consumption, and the flying was an exception, and today has become a norm. So look at how things shift over a period of time. What was a luxury has become a necessity. People cannot actually afford to spend 2 days sitting in the sort of train. So when we talk about consumer and consumption, and now if you visualize and when you go abroad, you look at the size of the store, you look at the number of people buying, and you look at the very simple example of companies like Nike. If I give you one example, you will be like blown away. What is the turnover of Nike? It's about 3.5 lakh crore. India ki jo one of the biggest consumer company, Hindustan Unilever, after so many decades, still 50,000 crore. But 50,000 crore itself is a big number. But think about in the global parlance for a company, which is just a shoes company, just selling Nike shoes, 3.5 lakh crore, $45-50 billion revenue. So आप सोचो कि consumption कितना बड़ा है. So when you talk about any private equity, but 1 minute के लिए आप भूल जाइए it's a private equity or a public equity. Think about consumption as a business opportunity. And whatever is a good business opportunity is a good investment opportunity. Very simple. life may something that is not a good business can never be a good investment. Okay, very simple. So when I say look at a consumer business, look at an investment, whether to start a business or to make an investment in this, try and understand whether these businesses that you are looking from investment perspective, can they last for 20, 30, 40 years or no? Will they remain relevant for the consumer of tomorrow? And that is most important. So there are 3-4 things that we really need to start thinking when we think about or when we talk about consumption, is that what has been the consumer pattern over the last, few decades? If you're only looking at 2, 3, 4 years, I think that's very important. But look at also the long term. Short term is important, but short terms can actually lead you to mistakes. It can be a momentum investments as well. We are seeing a lot of right now noise. A lot of people got into a lot of stuff that people actually don't even understand, but they got money. They invested into some of those things. Now, if you look at typically in the morning when we wake up and when we go and sleep, during those 16, 17 hours of while we are actually working, we end up consuming so many things. And if you look at the size of those things are evolving, are growing leaps and bounds. Okay. When we talk about over the last 75 years of India, if you look at, and when we are talking about Azadi Mahotsav and Amrit Mahotsav, if you just look at 75 years, initially, if you visualize India and think about the movies, and I'll give you this will absolutely clear your thinking and concept about consumption. The best thing you will correlate is the country's movies typically are made keeping in the minds the audience at that point of time, their lifestyle and their taste. So initially, if you remember, couple of decades right after the independence, our movies were largely related to farmers. Mere desh ki, mitti, sona, ubje, hira, moti, all those things were, big things, right? And then if you look at the next 25 years, all our movies had some, big dons, some heroes fighting for the land. Industrial revolution happened, labor unions happened. All those movies were made. If you look at the last 15, 20 years, you will see some of these movies where people are going abroad for holidays. And they are setting the trends for people to go and spend money. They are teaching you in a way. If you look at, they are indirectly teaching you how to spend money on yourself, right? And this is the classic case of understanding the core of consumption in India. When you talk about, and these are very common example, and the best part consumption investing is very easy. The best part of consumption investing, it is very easy to understand. कुछ नहीं करना आपको, खाली आपको अपने life से जोड़ के देखिए whether it makes sense. What you are doing in your life, does it make sense, and whether it will remain relevant for long period to come or no, right? And if you look at today, how many people are going abroad for holidays, and just think and visualize 10 years down the line, how many people actually might be going for a foreign holidays, right? And even in the domestic holidays, right? We talk about Srinagar, there is no hotel available. What is that? That's domestic consumption. People are actually traveling. So when we talk about consumer and consumer investing, this is the reason I wanted to talk initially before getting into the slides. Slides actually become a lot more formal. Is that consumption is here to stay. So long as you can visualize the consumption of roti, kapda, makan, and so long as you can visualize people getting richer, the roti, kapda, makan plus story will keep happening. You have to visualize what will that plus be. Okay, and that is exactly what I do here. Rochelle and I do here. Okay, so now we can go to the slides. I'm going to talk about some data which will give you a sense of how in numbers, when we talk about some of these, Rochelle, if you don't mind, we'll have to put the full wonderful. So if we look at in terms of our numbers, 20, basis the 20 number, where we are compared to other countries, and I'm only taking 2 examples. One is the developed economy because of the sheer size of the economy, and number 2, China, which is sheer size of the population. And we are in some way mirroring one or other, or in many ways we are being reflective. We are actually reflecting some part of both the economies. If you look at in terms of the GDP, our GDP today, and if you look at our consumption, our per capita income itself is very, very small. We are 1/5 of China. Okay, we are only 3.5%, 4% of what US per capita is. But you look at in terms of the consumption, despite being very low per capita income, our consumption is very high. 60% of our economy is consumption. In US is also 67%. China, it is low, 38%, for the simple reason that China is also a very high production economy they serve to the world. But if you look at their absolute consumption, is very high. Now, where do we see this number in terms of next 10 years? 30, if you look at where we see the economy, of course, is growing. We expect this economy to be $8 to $9 trillion at that point of time. But I think what will happen is this consumption of India, if you look at, which is about 1.5 trillion today, is likely to surpass 5 trillion. And when we talk about 3.5, 4 trillion of consumption economy incrementally over the 8 to 10 years, that's a massive amount. Think about that, is an amount that is going to be bigger than our economy today. Our economy itself is 2.5. And today, when we talk about almost 4 trillion of incremental consumption economy itself, just imagine the size. And I can tell you today, don't laugh, 10 years down the line, the way you see Mercedes and the luxury cars in Bombay roads, you will be finding in gully, chote shahar mein, you will find Mercedes, BMWs, or the new luxury cars that will get launched in the world. Very simple, that people who started with a two-wheeler have already graduated to Maruti. They're already now buying a lot of premium car today, and hopefully they'll move to the luxury also, right? आज हम 1000 रुपए की टिकट खरीद के मूवी देखने जाते हैं. पहले हम 100 रुपए में वहां पे चर्च गेट में खरीदते थे तो बड़ा महंगा लगता था, right? But 1000 रुपए is comfortable for some people. I'm not saying 1000 रुपए is the norm, but you look at how many people are able. Look at the kind of comfortable seats that PVR is offering to its audience. The Inox is now, these are transformation of consumption happening. Movie is a movie. People are the same, but the way they consume the content, the way they go and sort of, the willingness to pay for the services that is getting offered at a very high price. These are the trends that I want you to understand, that people are actually spending a lot more money on their consumption beyond the basics things, right? Next, Rochelle. If you look at these data, these are only indicative data, may not be exact amount, but see, in India parlance, what happens is whatever you divide by 100 crore, 1.25 billion, every number looks small. Our consumption pattern is very different. If you look at India, the top India, the middle India, and the lower India, the consumption bucket is very, very different. So these are basic number, these are number statistics. But if you look at in terms of average number, also the numbers have actually dramatically changed. If you look at our 5 to 20 consumption sort of pattern over the last 15 years, the food and beverages, which used to be about $85 per household, this used to be average number, has grown to $400. Restaurant and hotel, you look at the growth. What used to be, hum jaate hi nahi the bahar. Today you look at the QSR, the number of restaurants, right? You look at the dining options, you look at the ordering in options, right? Swiggy and Zomato, what they have done. आप पहले महीने में एक बार नहीं जाते थे, आप वीक में 3 बार ऑर्डर कर लेते हो, right? Your kids actually don't want to eat your home food. These are the new things. These are nothing but consumption, basically, right? People are willing to spend money on their lifestyle, on their own, on their consumption. And I think some of these data points will dramatically change over the next 10 years. We will, today, let me tell you, I am using the word, the pace of change is actually a lot faster than the pace of our own imagination. इतनी जल्दी चीजें बदल रही हैं कि हम विजुअलाइज नहीं कर पाते उसको. And by the time we realize, things have actually gone to a different trajectory, right? So I want to just, the takeaway from this slide is that if you look at the consumption is increasing across the bucket, but if you look at some of the things, people have actually spent highest amount of money on the education, which is the biggest sector of the consumption that has grown in terms of average, is education, which is very good. Our country is actually now investing or spending money on education, apart from, of course, spending money. Food is the lowest. Why? For the simple reason कि खाना तो पहली चीज है, हम पहले भी खा रहे थे. Okay, and you can't double eat. You can actually eat better quality, but you cannot eat more, a lot more, right? But what will you do once you have fed yourself, once your hunger is taken care, is when you start graduating to other needs, other consumption, right? And that is exactly what is happening. If you look at in terms of our spend in average, this dollar household, you look at the education, you look at the health, you look at, health has gone 6 times. Pehle hum log facilities nahi thi. We did not have access to the good Medicare, healthcare facilities. Doctors nahi hote the. Aaj gaon mein hospitals khul gaye hain, right? Luckily government is talking about now opening one AIMS in every single districts. This is brilliant. I mean, there will be a nice, hospital, not AIMS, sorry, a good hospital in every district. If I'm not mistaken, I think there is an AIM being open in each state, something like that. These are the stuff that you will see in 10 years time. Actually, these numbers will outgrow the food and beverages. Food is done. I think food will continue to grow at a 10, 12%, but some of these other sectors will grow at a much faster rate. Next. When I talked about this, I think somewhere I covered that, premiumization is happening in everything that we are consuming. We talked about movie, we moved from 100 rupees to 1,000 rupees tickets. In terms of the car, we have graduated from Maruti to luxury cars. In terms of bike also, we have graduated from 20, 30, 40,000 rupees to now, the imported bikes being sold. Look at the cycles, 1,000 रुपए की साइकिल थी, आज 10, 15, 20 हजार रुपए की साइकिल comfortably बिक जा रही है. These are some of the stuff that if you look at, we never visualized earlier, but it is the sheer power of people who have made money and wanting to consume more, better quality. They want to actually spending money on, we can say consumption, but basically they are improving their lifestyle, right? And in everything that you see today, what are the 4 or 5 things that are happening? What used to be an unorganized sector is getting organized. Food is one of the biggest example. If you look at today, you have so many varieties, so many options, so many brands of food. And this has grown from food to roti kapda makan. When we talk about it, what is DLF? DLF is nothing but an organized sector in the housing. Today, when we talk about an Oberoi or so many, great names in Bombay or anywhere else, or even if you look at companies like Kajaria, which is 3,500 crore of tiles. These 10 years back, they were like less than 300, 400 crore companies. Look at how much of tiles is India consuming now. One company is able to sell 3,500 crore. 30,000 crore is our tiles business industry now, which used to be 3,000, 4,000. So look at what is happening. Is the premiumization is happening across. जो कल simple cement की फर्श बनाते थे, आज वो cement की जगह पे tiles लगा रहे हैं. कल वो मार्बल लगाएंगे. And I think these are stuff that will continue to happen over the next 20, 30, 40 years as we move from being a developing country to a developed country. Finger crossed, I do think it will happen faster than we think. And we think it will actually happen across the country, not limited to the top 100 or the 200 cities, because aspirations are unlimited. As people make money, as people have access now to the goods, they can on a click of a button order anything and everything that they want. And that is what will drive the consumption. The brands that are emerging in some of the stuff, the categories that were unbranded, now having branded stuff. You look at brands that were regional state, 1 state, 2 state are becoming national brand. What used to be sold on the offline is now omni-channel. You have millions of options of everything that you consume on buying online. And I say that this is my favorite line. What used to be a luxury is today's necessity, and what is a luxury today will become tomorrow's necessity. पानी की बॉटल जब इंडिया में लॉन्च हुई 10 रुपए की, तो लोग सोच नहीं पाते थे कि पानी का पैसा देना है. 60 रुपए की जब कॉफी बैरिस्टा का पहला लॉन्च हुआ था बॉम्बे में, लोग सोच नहीं पाते थे. आज आप 500 रुपए जाकर के कॉफी का दे देते हैं, राइट? So this is the change of mindset. People are okay to spend money on some of these basic things. And people are now appreciating why they are actually paying 400 rupees. They are not paying for coffee alone. They are actually going and paying for the place. And some of these things are actually now becoming the norms that started as an exception. And these are real example of consumption, and consumption happening now across the country. Consumption actually boom is happening. Bigger consumption is happening in tier 2, tier 3. क्योंकि पिछले 5-10 साल में, metro cities में तो हो गया. You go to state capital, you will be blown away by seeing the sale of premium bags, the ladies bags, 15-20 हजार रुपए की, bag वहां पे, like they are flying from the shelves. 4-5 हजार रुपए के परफ्यूम वहां पे मिलते ही नहीं है. You look at the kind of consumption that is happening in the hinterland of the country, and that makes me happy that now as a country as a whole, we are becoming better. I think the improvement of lifestyle is happening across the country. It is not limited to the top 100 cities, and that's very good. Next, please. If you look at what is happening, why some of these things are happening, I think, we are in a very good spot as a country. We are lucky. Probably every country gets a window of 20, 30, 40 years where they make the, change. They go from one level to the next level. I think we all are very, very lucky to be part of this, that 20, 30 years where the things are actually going to change to a next level. If you look at what is happening, there are 3-4 things that are working in our favor. Is the working age population. We have an advantage of having a younger sort of population compared to US and China. And I think, because of this, our ability to make more money compared to other countries will be much higher for a longer period of time. And secondly, if you look at in terms of our working population, 67% of working and consuming population, if you look at in terms of the sheer number, is one of the largest in the world. So जो amount हमारा consumption का होगा वो भी बहुत बड़ा होगा. 67%, 80%. Just take 60-70% of 140 crore. I mean, you have 100 crore consuming people. That's people wanting to spend money on consumption, right? And that is the reason this makes sense to look at consumption as an investment opportunity. Urbanization itself is happening. We are seeing a lot of people moving from rural to semi-urban, from semi-urban to urban. And most important, I think what has happened, one thing in this country, which has surprised even everybody, every pundit in the world, is how quickly we have adopted digital transformation. Look at the sheer number, 75 crore people in this country has digital access, right? That is insane amount of sort of, I would say digitization. And I must also congratulate our government of India, every department who is working relentlessly to make this happen, and all the corporates who have taken a lot of pain to implement and create those infrastructure where now people have access to some of these things. I think this will have profound impact as we talk about for the next 10, 20 years. These are, I think, seeding the next level of lifestyle change. Some of these things will become enabler, as we say. Next. Rochelle, do you mind taking the digital thing? I want to specifically ask Rochelle because she spends a lot of time in the firm on the digital side. So Rochelle, if you don't mind, why don't you talk some of these things and then I'll come back to talk some other things.
Of course, I think with India, we almost skipped the desktop era is what they say, right? We completely moved from absolutely not having a smartphone to now having a smartphone and doing everything on the mobile phone. Do you remember the last time browsing for something on the desktop, right? So everybody does everything on the mobile phone. And the reason why Sachin is saying that, consumption is catapulted so phenomenally in India is because of the digital access. See, today, if you see the number of people who have digital access is almost the entire population, right? So 70% of the people have access to the internet, have access to a smartphone. And it is one of the highest globally when it comes to growth rates. The second is in terms of just the access of internet. See, today, thanks to Jio, we have the highest data consumption globally. Data consumption globally, and the cost of data has come down very, very cheap. You compare this data cost with any other country, we are again one of the lowest. So you're democratizing internet to every class of the population. And because of that, what happens is an Aam Aadmi is able to access a movie ticket, is able to access fashion and apparel. That is the reason why an Amazon and a Flipkart does extremely well in India. And the third thing is, in terms of digital transactions, aap hi socho when, you don't have cash and you tell the driver, boss, main aapko GPay pay kar dunga ya fir Paytm kar dunga. How many people are willingly accepting it today, right? Because that is the extent of people who are willing to transact digitally. So because of all of these things, it has helped consumption at a very different level. So just sort of adding to that, moving to the next slide. Sachin, you want to take this up?
Rochelle, continue.
Oh, I'll continue? Okay, wonderful. I think what was shocking for us, when we were doing this analysis in terms of digital India, we have almost the same population as China. And I'll give you an anecdote. Before the pandemic, me and the team, we spent some amount of time in China just to understand the level of consumption that is happening in China. And what blew us away was almost everybody in China is transacting on the mobile phone. Most of the transactions are digital, and there's hardly any cash in that economy. And so when we were doing some of the numbers, we realized that India is not very far off. So in 2025, online India is going to be where China is today. And that's a very, very powerful state to be in, because you'll have almost 1 billion people in 2025 in India who will have access to the internet. Almost the same number of people having a smartphone. And you'll have almost 40% of those people who will be transacting online. So think about the implications it will have to businesses. Now, when Sachin and I have invested in businesses 10 years back, no founder used to think about a business on the online front. Today, you can't think of a business without having an online front while you're having the offline. So we feel that online India is going to be a very powerful piece which will add to the Indian consumption going forward. And just taking that forward in terms of what the implications can be is in terms of the e-commerce market. See, today, there is a reason why the Tata Group, the Reliance Group, is acquiring so many of these businesses. Today, Tata acquired 1mg, Reliance has acquired NetMeds. They are creating super apps within themselves. Tata has Tata New as an app. Reliance has Jio Life as an app. There is a reason why that is happening, because even these corporate houses are predicting that consumers are going to transact digitally quite heavily. And the data supports that. If you see globally today in terms of growth, India has one of the highest growths in terms of e-commerce. Now, what does that mean? If you saw in 2018, e-commerce penetration was only about 3%. But we feel in another 3 years, that's going to go to 10%. At 10%, you're going to have almost a $130 billion e-commerce market in almost a $1 trillion retail market. That's phenomenal and powerful when you think about it from an Indian context. And that's the reason why you see growth of so many of these brands. And we thought it is relevant to talk to you about this in terms of how some of these brands have grown. Sachin, I think this is your cue here.
Okay, no problem. If you look at, when we talk about consumption and the size, when I talked about the last 10, 20, 30 years, in fact, some of these companies were there, we just didn't visualize. The ones who visualized actually minted money. And if you look at when we talked about Nike's size, 3.5 lakh crore of revenue, it is, in the global phenomena. But just think about Unilever, just one country number, 50,000 crore revenue. 50,000 crore is insane amount of, turnover for a company. And you look at how they have transformed in the last 15 years. They've grown from, almost 10,000 to 50,000, 40,000 crore of new turnover has been added for companies like Unilever. 5.5 lakh crore of market cap has happened. Think about the size that, India has created in consumption sector. Dabur and Marico, if you look at the stocks and अगर देखेंगे 15 साल पहले उनका market cap 3,000-4,000 होता था, आज वो 70,000 crore, 80,000 crore kind of a number that they are sitting on in terms of the market cap. And look at the size, 10,000, 11,000 crore of business. What used to be a 1,000 crore company, Marico, people used to say it's a coconut oil company. Today it's a full grown FMCG company with almost 10,000 crore of revenue. बाकी सब छोड़िए, if you look at Domino's, 5,000 crore का पिज्जा बेच देती है. Who can visualize in India one company can sell 5,000 crore पिज्जा और 5,000 crore का तो ये इंडिया का नंबर 1 कंपनी है पिज्जा का, राइट? Just look at पिज्जा penetration, कितने लोग इंडिया में पिज्जा खाते हैं? 10 साल के बाद आप सोचिए इंडिया में कितने लोग पिज्जा खाएंगे? And look at some of these businesses, the sheer size that they will attain over the next 10 years. This is Titan. लोगों को लगता था घड़ी की कंपनी है. Their jewelry business became much bigger. Can you ever visualize a brand like Titan or a Tanishq? गांव-गांव में तनिष्क के स्टोर खुलेंगे, राइट? बिकॉज़ ज्वेलरी तो यहाँ पे बिकने वाली है. कितनी भी गवर्नमेंट बात कर ले कि गोल्ड इंपोर्ट कम होना चाहिए, बेसिक नेचर है, लोगों का कंजम्पशन बदलता नहीं है, उनको खरीदना है, खरीदेंगे, राइट? एंड व्हाट विल हैपन? तनिष्क बेचेगा ज्वेलरी, उनको अनऑर्गेनाइज्ड से ऑर्गेनाइज्ड शिफ्ट हो जाएगा. पीपल विल शिफ्ट फ्रॉम अनऑर्गेनाइज्ड to organized, unbranded to branded, and some of these companies will become even bigger, right? Asian Paint has become a 30,000 crore paint company. Who would have visualized? So look at the sheer size, and these are happening. These are some of the things that have happened where we are still less than a $3 trillion kind of an economy. Just think about where we are talking about. when we talk about 4.5 trillion of incremental consumption economy over the next decade, some of these businesses actually will become 3, 4, 5x. You will have 1 lakh crore kind of companies in consumption sector alone. Can you visualize 1 lakh crore? I mean, think about just doubling the turnover. Unilever will be a 1 lakh crore turnover company in India. That is the sheer size of consumption basket in India when we are talking about. Next, and look at on the right side, just the last 10 years, some of these companies have become so big, Nykaa, Zomato, Swiggy. Who could have thought about it, right? Today you're spending almost 6,000-7,000 crore worth of revenue between Zomato and Swiggy on the food, and their story has just started. Next, Rochelle. This is just an indicative slide on valuations. Again, this is subject to capital market. Given where we are in terms of market volatility, I would rather talk less about it. These things will again depend upon investors' perception. But if you look at in terms of last 2 years, of course, there was a little bit of euphoria in the market in terms of the valuation compared to the historical average, and a lot of this has corrected. So I think now consumption cycle or consumption story or consumption stocks are now coming to the average where they have actually historically traded. And as long as some of these companies will continue to grow, I think they are now finding a valuation range which will be far more comfortable to the investors than it was in the last 2 years. Rochelle, why don't you cover this?
So while we've spoken about India consumption, right, there is a reason why Sachin and I are so excited about this space, because it provides ample amount of opportunities, and the way the landscape itself has changed over the last 1.5 to 2 decades itself is phenomenal. So we thought it is relevant for us just to tell you about how we look at the landscape in terms of private equity, because even within private equity, there is shades of private equity. So we broadly broken this down into 3 buckets. So one bucket is what we call all the venture funds, the Sequoia Capitals of the world, who do not have any sort of ticket size related restrictions, but they almost always come at the venture stage, either at proof of concept stage or before proof of concept. There are so many people right now who do seed stage investing. Angel investing has become a very vibrant platform today in India, given the amount of capital that is available. So all of that comes in this bucket. Then we have something called the growth funds. Sachin and I, our fund, which is Lighthouse, falls within this bucket, which is the growth funds. What we do usually here is that we take minority stakes in companies. Our modus operandi is not to own these companies, but we provide growth capital to the promoters who then want to grow the business. If they have a dream to achieve in, say, 5-7 years, can they, sort of shorten that to 3 to 5 years? So that is the typical, role that private equity plays in this space. Some of the examples I'll talk to you later about in terms of, investments that we've done. You've heard of brands like Bikaji, which is our namkeen business, Duroflex, which is a mattress business. A very popular name that has recently gotten listed, Manyavar, again, was ideally in this growth capital bucket. Another sector which has developed in the last 5 years, it wasn't very vibrant before this, but it is far more matured in, say, a US market, are the buyout funds and the platform funds. These are largely taken over by, the global MNC funds, and they have large pools of capital. So their investments are over about $100 million. So deals that you would have seen, jaise DFM Foods hai jo listed hai abhi, where, a very large MNC fund took over that business. Similarly, Crompton Greaves. So we are seeing, at least in the last 5 years, Indian entrepreneurs, founders are also quite amenable to give off majority stake to these funds. And they may have succession issues, or they want to take on a bigger chunk of the industry. So they are able to partner with this. So we're seeing this part of this bucket of investing also developing in India. And you'll see all these 3 engines of private equity firing. But at the end, I think what's relevant, or the takeaway from all of this, is we're absolutely fascinated with the growth that consumer as a sector has got from private equity over the last 10, 11 years, right? 100x growth. Today, in 2021, last year, there was about $26 billion of investment into as private equity into the consumption space. So that speaks volumes of how the sector itself is growing. Now, if I move on to the next one.
Just 1 minute, one request, Pinky and everyone else. I'm really, really sorry. I have to fly out of country for a medical emergency in my in-laws' side. So I have to, I had apologized in the advance itself. Rochelle will continue. My flight is boarding. I'm actually at the airport. So I thought whatever time I have, let me at least join you. So my apologies, and I will have to now drop. Rochelle will of course continue. So my apologies, and I hope that you guys don't mind. Really, I feel ashamed to be doing this. But unfortunately, these are some of the things that are beyond my control. So on that note, thank you so much, and I am excited, and thanks for your time. Rochelle will continue, and she will do a better job than me.
Yeah, Sachin, give me 2 minutes only. Akshay, can you give a vote of thanks to Sachin?
It's fine. Don't worry.
No, please,
It's fine.
please, Sachin,
Yes,
please.
ma'am, yes,
From
ma'am.
our side, we have to give this.
थैंक यू सचिन जी, आपका अमूल्य समय निकाल के और ऐसे इमरजेंसी के टाइम पे भी हमारा मान रखा सर आप आके, और आपने बहुत अच्छा गाइड किया. आपके एग्जांपल हम खुद रिलेट कर पा रहे हैं. जैसे फ्लाइट, अब ट्रेन की जगह फ्लाइट लेना प्रीफर कर रहे हैं हम भी मूवी टिकट पहले सादे थिएटरों में देखते थे, अब भी थोड़ा बजट और ये बड़ा है. सेम गोज विद कार सर. आपने जो कहा सर हम रिलेट कर पा रहे थे, और काफी अच्छी से हमें गाइडेंस मिला है. थैंक यू वेरी मच सर, आपने आपका अमूल्य टाइम निकाला उसके लिए.
थैंक यू. अभी तो मुझे लगता है बेस्ट पार्ट ऑफ द प्रेजेंटेशन is actually starting, so stay tuned. I just thought to the extent I can join, I wanted to join. It's Institute's program, and I'm just privileged. I'm thrilled. As I said, it brings tears to my eyes that I've been invited on such a august platform, and whatever I can do for this institute throughout my life, I'll be willing to do that. No problem at all. Thank you so much for inviting us. Thank you. Please continue.
Thank you, Sachin. Thank you.
Bye,
Take care.
Sachin.
Happy
Safe
journey.
flight. So I'll continue. And so as I was saying, so private equity today is very excited about investing in consumer businesses. But ek baar entry maar di, then you have to also think about your exit opportunities. Otherwise, there is no point to private equity. And over the last 10 years, at least, based on what we have seen, the ability to exit in private equity has become far more liquid. It is far more possible and far more lucrative. And today, I know in the audience, there are so many of the chartered accountants, and you may be advising so many of the promoters in India who may be confused ki private equity le le, na le, usme fayda kya hai, what could be the jhamela, exit ka kya situation rehta hai. I'm sure you must be getting all of these questions. So Sachin and I were thinking, Actually,
there is a question that how can we as a retail investor participate in private equity, and is there any exit route available? Same question is here only.
Of course, and I'm very happy to answer that as well. So, the good part at least is now there are so many modes to exit. But the 3 important modes where we are seeing so many success situations, and I'll explain each of them to you. One which has been very famous is the secondary sale. जैसे अभी एक private equity ने invest कर दी, after 3-4 years or 5 years, if they want to exit, there are so many other funds who will be willing to take on the stake. So there is no pressure on the promoter to provide the exit. If the company is doing well, there are enough and more private equity funds who are willing to buy. जैसे I'll give you an example. Very recently, First Cry में investment हुआ था, Lenskart में investment हुआ था, हमारे खुद के portfolio में जैसे बीकाजी में investment हमने किया था. But we have had interest from so many private equity funds to buy our stake. So that is called secondary sale. The second and a very important one is strategic. Iska matlab hai, there are so many companies which are out there who want to buy all of these growing companies. And I'll give you an example of my own investment, which is Kama Ayurveda. Ye company thi jo, luxury Ayurveda personal care products banati hai. And it used to be just a 5 crore business annually. It has now grown to become a 150 crore business. And we managed to sell this business to a Spanish or a European company, a very large company who wanted to make an entry into India. So similarly, जैसे आपने देखा Tata is buying the big basket, या फिर Colgate Palmolive buying Bombay Shaving Company, Marico buying True Elements. So there are so many ways in which even strategic sale today is a possibility. And the third and the most important, I think, is the IPOs. Thanks to the last 2 years, the IPO market has been very vibrant. And we've realized whatever happens, right? If there is growth and if there is profitability, there is always a flavor for consumer companies. 19-20 हो सकता है, ऊपर नीचे हो सकता है, लेकिन there is always a flavor. So today, even if you see, there are companies, despite the troubled markets, have been able to sell themselves in the IPO, especially when they are consumer companies. So if you see Nykaa, if you see Devyani, Burger King, Go Colors, these are solid brands which have gotten listed. So the reason to put this slide was just to tell you that there are multiple modes to exit, and it is becoming far more possible today. My answer would have been very different if you asked me in 2008, 2007, when it was very difficult to exit investments. But today it is far more easier. This is another, I get this question a lot from, advisors as to private equity ko kya businesses pasand hai, right? Especially when it comes to a consumer company. So we thought, what are some of the common threads that we look for in a business? One is एक reason for existence होना चाहिए. अगर वो product unique है, is it solving the need of the consumer? For instance, let's take the example of Dove as a brand, right? Dove, there is a need for existence. It is a product that appeals to the woman who wants to premiumize in terms of a product segment. So it's sort of, it solves a specific need. Similarly, the other important parameter is to look for growth. Is there growth in the business? या फिर वो growth stagnant है? Because at the end, whatever happens, you always get a premium for growth. The third is the ability to pass on prices, especially in an environment like this, which is an inflationary environment. आप ही देख लीजिए in the last 2 quarters, you will see an HUL increasing prices by 10%. P&G has increased prices by 10%. But volume ऊपर नीचे थोड़ा सा हो सकता है, but you will not lose the consumer because you have the ability to pass on the price. And that is the strength of the brand. And that is why, if that strength is there, you can be able to command a premium. The fourth, and this is what is most close to my heart, is capital efficiency. कोई भी आप balance sheet में देख लीजिए, consumer companies will always have a very high return on capital employed because they will work with least amount of gross block, least amount of working capital, which is why the return is very high. They're very capital efficient businesses. And that's why they get that premium. And with this comes the cash flow generation, right? Everyone keeps asking, why does HUL trade at that premium? Why does Nestle trade at that premium? That's because the balance sheet is tuned in that particular way. Say, for instance, there are many sectors जहाँ पे आप मतलब asset turnover one time होगा, जहाँ पे आपको 20% का growth चाहिए तो 20% का आपको capex लगाना पड़ता है. You have almost 6 months of working capital. फिर वो cash flow बनता नहीं है आपका. So from that angle, consumer is very nicely placed because you don't have those problems, because you are able to get very high asset turns and low working capital. And I thought I'll give you a little bit of flavor about Lighthouse. And there are many other funds like us who invest in India today in the consumer space. We manage about $500 million of capital. I won't bore you on all of these things, but we do minority investing anywhere between, say, 150 crores to about 500 crores of investment, but only minority. And some of the brands that we've had the privilege to partner with and the promoters that we've partnered with, Bikaji is our ethnic snack foods business. Nykaa is a very popular business that that got it listed. Similarly, Duroflex, which is one of the largest mattress companies. You have FNP, which is, if you have to buy a bouquet for your mother on her birthday, you would use this platform, right? Sachin spoke about how many times we keep eating outside. Wow Momo is one of that, which makes these momos and dumplings, again, following the same story as Domino's. Fab India, many of you know this brand. Similarly, we've backed many other brands, but this is just a representation. So I will stop here in terms of, explaining about the Indian consumption space. We are very excited and hope with this small presentation, we have excited you enough in terms of understanding a little flavor about the Indian consumer, and very happy to answer any questions if there are.
Just a second. Vinay, if there is a question. Vinay ji? I think just a second.
Rochelle,
Yes.
so there was one question which is partly answered, and perhaps you can throw more light. Is can there be retail participants in private equity? So retail investors, is there any more to invest? That's a
Yes.
question from Mr. Harshad. Yeah.
So we have a lot of ways in which, retail has started participating in private equity. So there are two ways. See, usually kya hota hai, funds like us, like Lighthouse, most of us have been able to get money from very large institutions in the international markets, as well as large institutions from India, right? The domestic markets. This includes endowment funds, pension funds, family offices, so on and so forth. But there is a growing interest of retail money. जैसे बहुत सारे ऐसे families होते हैं जिनके पास बहुत सारा पैसा रहता है, but they don't know how to invest. So there are a lot of domestic vehicles wherein if you talk to your wealth manager, the wealth manager will be able to connect you to the right folks, where private equity raises money from the retail investors. But at the same time, you need to be mindful of one thing. See, क्या होता है जब retail capital market में participate करती है, liquidity is very high. So you can entry and exit very easily. But in private equity, there is a certain level of lock-in. So if you invest today, you have to be okay that you're not going to get your money for the next 5, 6, 7, even sometimes 10 years. So you have to stay locked in for a very long period of time, which is why there are only certain type of retail participants who have large pools of capital, who can part away with that capital for a long period of time, have invested in private equity. Otherwise, it is not an asset class for the general public. I'm seeing some questions pouring in. Anshul, would you be able to help me with this?
Yes, sure. So there are two questions, and I guess both are similar. So one, Mr. Jinesh wants to understand how to connect with PE funds. I'm not sure what's the context, but perhaps it's, let's say, from a career point of view. And then there is a question from Sangeet, sorry, not from Sangeet, from Disha, how to get jobs in capital market. So, I mean, I would like to club these two, both capital market and private equity, because it's to do with investment, and how to reach out and find relevant opportunities is the theme of that question.
I think the best way is LinkedIn, right? Mr. LinkedIn is the best way to do it. You have to be persistent. Private equity funds are always on LinkedIn. Connect with the partners, connect with the team, be in forums like this, because, everyone's linked to somebody or the other. And it is just like finding any other job. I don't think private equity is very difficult to reach out to. Ye koi special club nahi hai, right? Yeah. So, and given that you are already a CA, you already have that added advantage. So always just, be forthcoming, send a cold call email, and it works best. I get so many emails from people asking for advice, guidance, and we make it a point to at least, sometimes responses will be delayed, but we definitely respond.
Yeah, most definitely. I mean, the opportunities are limited, but at the same time, if I may add that the skill set will eventually take you to the right place. So keep building on skill sets.
I must say this, 5 years back or 10 years back, private equity used to be very particular ki is college se hi lena hai, us college se hi lena hai. But, we've seen so much, personally, and in Lighthouse, we've seen so much success with CA folk. We've hired so many of the CAs, Sachin himself. We have so many other people within the firm who are CAs. We recently, I think there's one who's attending this call, who is my colleague again, who is a CA. So, don't assume that, private equity doesn't take CAs. I think one of the most successful people are chartered accountants. So I think you have the added advantage.
Actually, I think Jinesh want to know that how to connect with PE for his client. Actually, for
Perfect.
his
I
client,
think
he
that's,
want.
again, it's, just send an email, with, say, for instance, it's always helpful if you have a client who is wanting to raise capital. I'm assuming this is for that, right? Say a client wanting to raise capital. The best way to do it is if you have a teaser, one slide explaining what the business does. Why do they want to raise capital? Send a quick email saying, this is the client, this is what they want to do, this is what they do, this is what they want to raise. And I guarantee you will get a response from typically responsive private equity funds who will say either this is applicable to us, or it is beyond our investment, ticket size or a focus area or whatever the case is.
Yeah. So there are two more questions. One is, and both, I mean, kind of relates to the valuation of companies, and particularly focusing on startup valuations, which has both seen the astronomical valuation in recent time and also some level of corrections. And primarily these are driven by private equity funds themselves. So what, in your opinion, is the thought process behind it? And once, as a potential exit and also as a potential acquirer of a existing portfolio, how do you evaluate and more so critically in terms of identifying the right valuation?
Very, very valid question, I must say. And it is a question that haunts each and every investor, to be honest, because it's an art and a science put together. There is no right answer, because they say beauty lies in the eyes of the beholder. But let me take a crack at it. Look, in the venture side, because we don't invest in venture, it is very difficult to answer this question, because there will be companies that are pre-revenue. There are companies that have very little sales but have a very high option value. In those cases, valuation gets very nebulous. It is not my area of expertise, so I will not hazard a guess there. But given that I specialize in growth equity investing, it's a far more there is a structured approach to thinking. For instance, we end up investing in a lot of, there is historical growth in companies, there is history to the business, right? So you are able to understand, what the growth is, what is the profitability, what the cash flow generation is. And usually we take multiple methods of valuing, but at the end, it has to make sense at a profitability level. We don't believe in the concept of a sales multiple, because at the end, it has to be on price to earnings. Even today, when you look at the markets, if there is, I usually love this metric called PEG, price to earnings growth. So if, say, for instance, a business has a PE of 30 times earning, but that business is growing 30% year on year, right? So then PE divided by growth. So 30 divided by 30 is 1. So it's a PEG of 1. So anything which is equal to 1, less than 1, you can justify the level of the PE multiple. But anything higher than that, then you need to justify to yourself, in the future, will that business grow to catch up to the earnings, right? And that's a call as an investor you need to take, because at the end, the money that you're putting in has to generate a certain IRR. And if the growth is not there, you cannot hope that the 30 times PE will become 40 times when you sell. Never will that happen. So your only best friend is growth. And that is why, as an investor, you need to underwrite growth in a sacrosanct fashion. And as an investor today, me and my team, we spend most of our time underwriting the business's ability to grow. Apart from governance and everything else, it is growth. I hope I answered the question.
Yeah. And I think you have answered in quite a detailed. There's one question, and it's interesting actually. So Mr. Baumil wants to know how, as an investor, one would want to see SME IPOs and PE different. What are the similarity and dissimilarities from an investment point of view? How do you evaluate an SME IPO vis-a-vis a PE investor?
Okay.
If you can just briefly share.
Very nice question.
More and more
again.
questions are pouring in.
Yeah, very nice question, in fact. So, and I'm sure that you guys must be all advisors to, the various founders who are out there. And you must be getting this question. See, typically kya hota hai? SME IPO mein, it is extremely passive investment. You are going to get a bunch of retail investors who are going to be passive. They are not going to participate in the growth of the business. So you're able to raise the capital, but you are left on your own as a promoter. In private equity, it is a far more active investment. So think about it. Say, for instance, I invest 100 crore in your business. I will sit with you. I will understand your challenges and your pain points. And I will see if there are areas that I can add value. Just say, in a business that I'll give you an example. We invested in a business called Tynor Orthotics, which is, which makes these orthopedic soft goods. Just say, you have a fracture or a sprain, those braces that you wear, right? When we invested in this business, it was sub 100 crores in size. Now, this business could have gone for an SME IPO, but they chose to take a private equity investor because they needed help in hiring. So we helped them hire the chief, their CFO, their head of sales. They needed help in sales and marketing. They needed help in, all their branding strategy. And I'm on the board of this company. So we've been working very closely, how to help the company transform itself. It's a company based in Chandigarh, very difficult to attract talent. So think about it. If the company just went to an SME IPO, ye sare unko ye help milta nahi tha, right? But when you get private equity, an active private equity fund, you get all of these benefits.
So it's not
Now,
just money capital.
What is
but also...
now I'll tell you the flip side. In an SME IPO, if it's passive, then there is nobody who is asking questions. Now, as a founder, you need to decide, are you okay for an external investor to hold you accountable? Now, that accountability can be a very inclusive accountability. It becomes dangerous when it becomes intrusive, when it becomes interfering. That is where, I will advise you as advisors to the founders that you have to do your due diligence on the private equity funds, how they have worked with the previous owners, what has been the pain points, what have been the success stories. So always do your due diligence before you choose your private equity fund, because I use this phrase, private equity is a marriage with a predetermined divorce.
I'll take this learning with me that you have to do due diligence on the investor, which is something
absolutely
we tend to ignore. There's one more question from Mr. Hitesh.
Yes.
I think the question, I'll extend that question. The question is, any particular market category or sector where you think will hold most promising future from a private equity investment perspective? He has given example, it could be e-commerce or something else. While I know you are most passionate about consumer sector, but in addition to that, where do you see opportunities in this segment?
Look, I think at the end, you have to look at the consumer's wallet. So within consumer, again, there are various subcategories. Today, healthcare, I feel, is a very underpenetrated sector. So healthcare will get massive interest and investment from private equity funds, because here again, it's very typical in India that you're not funded by insurance. It is out of pocket of the consumer that is the spend that is going on healthcare. So as incomes increase, your spending on healthcare will increase. So this is one specific area which can be very interesting. The second interesting area that can be very interesting is manufacturing in itself, right? There are so many businesses, traditional businesses that are doing manufacturing. And today with the China Plus One, manufacturing can be a very important theme as well, where private equity is increasingly looking at it. See, e-commerce is definitely interesting, but in e-commerce, you also have to be mindful of pitfalls, because e-commerce, whatever said and done, requires a lot of heavy investing, right? So you entail a lot of losses at the same time. So you get growth, but you have to be okay with the losses. So you have to think about it very carefully while investing in e-commerce as well.
I think, and now India almost, moving with all engines being on fire. So there are multiple sectoral opportunities, not just in public market, in private equity and other sectors. While we wait for more questions, Pinky ji, can I ask one question from my side?
Yeah, sure, anytime. Yeah.
So, Rochelle, so I come from a debt capital market background. Prior to that, a turnaround consultant. I would like to understand, while you do provide growth capital to a lot of portfolio companies, and as bankers, we tend to provide debt capital, and venture debt itself, the venture debt area is rising. But do you see PE funds and debt capital providers joining hands together? And is there any example from your own portfolio?
Look, I think there has to be a fine balance between debt and equity, right? We have seen where, companies that have raised a lot of debt, and when that debt goes into, typically debt goes into funding various kinds of balance sheet related items, largely capex. And when you have a downturn in the business, businesses are not able to generate cash flow, are not able to service debt. So what happens is you get into a vicious cycle. And Anshul, you would have seen this so many times in your debt avatar. So that is when I think, sometimes equity funds can give that little bit of breather, because it gives you a one-time release wherein, the businesses can probably pay off debt. So I see there is a good synergy where equity and debt can live hand in hand. But like anybody says, too much of anything is dangerous. So there must always be a balance of both.
Yeah, thank you so much. Do we have more questions, Pinky ji, Akshay? I encourage participants to use this opportunity. While we wait for question, I would like to share one insight. Someone was saying that how digital has transformed the consumption pattern, and it's very interesting to observe that we are consuming this knowledge sharing session through a digital platform, and in an exciting space like private equity, which during my CA days when I became CA, perhaps I haven't heard so much about it, and I'm sure a lot of members would be able to maximize their outcome from this session. So I encourage other participants to keep on asking questions if there is in your mind.
I'm accessible on LinkedIn. Feel free to send out questions. We're very happy to answer them, share experiences, and very fortunate to be a part of this session.
Rochelle, perhaps while we wait, I'll extend one more question from my side for the benefit of all members, because you are part of a fund that does a lot of investing, and which means not only you have to first keep on originating new deals and also then plan for exit. So once you have exited some of the deals and there is a new capital coming in, how do you originate and identify? I mean, in the consumer segment, there could be thousands of brands and companies spread across India. I mean, the sheer size in the SME segment, there's so many. It is much possible that in this Zoom call of 55 participants, there could be some entrepreneur as well. How do you identify and reach out to them, and how do they identify and reach out to PE funds?
Thanks to CA folk like you, you're the source of all the ideas that I get. I think, we have a network of advisors because, I think founders trust CAs a lot, right? Their own chartered accountants, their own auditors, and typically a lot of the decisions, they sort of use them as a sounding board, which is why we have a very good network of chartered accountants who keep bouncing off ideas saying, Rochelle, does this work? Will this be a good investment opportunity? So on and so forth. So that's one area, of course, Anshul. But at the same time, I think me and the team, I lead investments in Lighthouse. And I lead the team in terms of the complete research, right? So within the various sectors, be it consumer, healthcare, and various other sectors that we look at, I think it's very important for us to identify what the trends are. So this constant updation of every sector on what are the trends, what's happening, which are the interesting companies. I think that's always a work in progress. It's never a project, right? You have to constantly keep reading and reinventing yourself, and you always get those ideas.
Okay. There's one, Akshay, please.
You're on mute, Akshay.
Ma'am, can you please share with us what are the red flags you look in a company before investing so that we can avoid that venture or that company before investing?
Fantastic question, Akshay. Again, I think, one of the biggest red flags for us is governance, right? And governance can, come in various shapes, sizes, different colors and forms. I think at the end, you as chartered accountants have a very good understanding of what the intent of the promoter is. And that in itself should be a, a red flag indicator or a green flag indicator. So some of the things that we look for is, what is the sanctity of the financial statements? Tax regularly pay karte hain ya nahi? Agar tax nahi pay karte hain, why are they not? How are the expenses flowing through? Personal kharcha wahan pe hai ya nahi? Even if it is there, that's not an issue. But I think if the founders are upfront and saying, look, we've run the business in this way, but going forward, we intend to do it in a particular way. I think that honest conversations, to be able to have that in an open forum, I think shows the intent of the founders and the family when they want to take an external investor. The other area where you can always see red flags is on the debt. Aapne debt le liya, working capital le liya, but you don't see commensurate growth in the business. Or, it is sitting in gross block, but the gross block does not seem to be adding any value to the sales. So then you know that, okay, there must be some issues with respect to it. On the working capital, is there true working capital? These are some of the areas when you read a balance sheet, you kind of understand through the cash flows. So I guess there are various ways to skin the cat, but I think, Akshay, this is how we test for various red flags. I hope I answered your question.
Yes, ma'am.
Rochelle, there's one more question from Mr. Jinesh, and he wants to understand the vehicle that you use to invest. I mean, how does the money flow? Does it flow directly or through an AIF structure, or is there any other vehicle?
So look, we are FDI. So our vehicles sit in Mauritius, and through the Mauritius entity we invest. But there are many private equity funds that also have the AIF structures, which are structured in India. Through those vehicles, you end up investing directly into the companies. It's a straightforward, non-complicated structure.
Okay. And there's a straightforward question from Mr. Manish. And what is the ideal multiple for consumer segment? I know within the consumer segment, there are multiple other sub-segments, but is there any thumb rule from a pure mathematical point of view, which you can act as a guidance, at least for comparison, if not investment?
Honestly, this is a question that has no answer. At the end, I think, look, there are different types of investors who are comfortable with different ranges. But usually in consumer companies and in late stage investing the way we do, we usually will give a multiple on profitability, whether it is an EV EBITDA, whether it is PE multiple. I think at the end, it all triangulates, but it is always a multiple of profitability. Now, whether that's 10x, 20x, 100x, it depends on the ability of the investor and the risk appetite of the investor and what return expectations are the investor is expecting.
I think the outlook is very futuristic rather than relying on the past data per se.
Of course.
And then in that same thought process, there's a question from Bhomil Jani. So while evaluating an investment, and I think you have answered in great detail, but just to summarize, if you can, how is the growth decided? Do you decide on future expectation based on certain indicators or past P&L and balance sheet figures? Or is there any market data around demand supply zone or micro market data? What are the things that goes behind in terms of identifying where growth would come from?
In fact, look, as I said, right, I spend a lot of time underwriting growth, because you get this wrong, everything else goes for a toss, right? Your entire IRR return goes for a toss. So how are you able to underwrite growth? This is where the history is very important. What has the business done historically? And will they be able to replicate that? If they're not able to replicate that, but better that, then what are the dynamics that are changing? What are the levers that are changing? And then we have to stress test all of these levers. For instance, we will try and understand what is the industry growth. So say for instance, this company has historically grown at 15%. But company is saying we will grow going forward at 25%. But if the industry is only growing at 5%, then you have to figure out, okay, if he's going to grow at 25%, is he taking on more market share from the existing players? So then you double click on what is the industry structure, how many players are there, what is the market share of each of these companies? If he's going to grow at 25%, what will the future market share look like? Then you have to double click, is that possible? So we do a lot of, I call it a market walk, where we spend a lot of time with customers, distributors, retailers, name it, right? All stakeholders to understand and stress test these assumptions. So we don't just rely on reports and, desktop research and all of that. We end up walking the market to understand, does this make sense? And if it makes sense, then we use that as the growth multiple.
Yeah.
And as an equity investor, this is the biggest risk that you underwrite.
Yeah, understand. I mean, unlike capital market where you can easily enter and exit, in PE investment, you have to do your homework quite deeply, because exit doesn't happen as soon as possible. There's one more question from Mr. Hitesh. Let me just go through it. It's a long question. In the process of it. So Mr. Hitesh wants to understand how is
I understood the question.
Yeah, please.
I understood the question. Look, I think it all depends on the investor. Now, personally, I also invest in the stock markets. But the way I look at investing in the stock markets is exactly the same mindset that I would put in private equity, right? Because at the end, it is, will this business be able to generate a certain return at the end of it? So I guess you may not have, the only difference between private equity and capital markets is that you do not have access to the management. But at the same time, you will have access to annual reports, to financial results, to earning transcripts, con calls, so many other things, which will be able to give you a good understanding of whether that business is doing what it is expecting to do. So from that angle, you'll be able to take a call whether that is the right investment or not. From a valuation perspective, I think the only difference that comes between private equity and personal investing is your risk return expectations and your time horizon. In private equity, I know that I can stay invested for X number of years and I need to generate an X return. But as a personal investor, you may say, okay, I've invested in real estate and gold, and now I'm investing in stocks and I need a certain return. So that aspect varies. And you can diversify far higher as a personal investor versus a private equity investor. So there are various ways in which you could adjust your risk return profile. But otherwise, the approach, I think, is quite similar. Unless you're a speculative investor.
Yeah, thanks for that answer. There's one more question from Mr. Rajiv Bhartiya. He wants to understand, is there a need to decouple India versus other mature economies like US and Europe? I mean, we did give an example during the presentation how there are signals from mature economies, how consumption have changed, and which is being replicated in Indian economy as well. But at the same time, to what extent those signals are relevant for India, and are there any new signals in India itself which is perhaps not applicable to Western economies? And look, consumption might be similar, yet they are dissimilar in different parts of the world.
See, I will answer this question in two buckets. I'll talk about the similarities and I'll talk about the dissimilarities. See, at the end, we are human beings, right? Whether you're an American, European, or an Indian, at the end, you're a human being. And there are needs of a human being which are very similar. To what extent you will fulfill those needs and what incomes you have may be different. But usually the aspirations are upwards. You look at something that you aspire to. For instance, you look at a movie, or you look at somebody, you look at your neighbor and you aspire to something. And whether you like it or not, you tend to look at the Western cultures and you try to emulate, because for you, that is the signal of prosperity. So there are trends that you will look for in the US and Europe and say, these are the things that happened probably 30 years back, which will happen in India. For instance, the entire food service. See, today, if you look at what's happening in food service, is what happened in food service almost 30 years back in the US, right? When I spent time in China and I saw some of the things that were happening in China about 5 years back, is what is happening today in India. So I'm not very surprised with the Swiggy today, because I saw a Meituan in China almost 5-6 years back. So there are a lot of trends to learn from as an investor. But where I see dissimilarities also is, for instance, we've completely, as I said earlier, we've completely missed the desktop era, right? In the internet revolution, we catapulted and jumped completely to the mobile phone. So there are certain trends that we've completely missed and we've gone to the next level. So India is growing at a much faster pace compared to what's happening in the US and Europe. Also, the other aspect is our familial structures. You know, we are far more familial as a community versus the US. So there are certain sectors and needs which will be very typical to India compared to the US. Similarly, think about taste profiles and culture profiles. Every probably 50 or 100 kilometers, the taste profile differs. So you have a lot of regional players which are there in India. For instance, spices is the biggest example. Every region or state will have a big brand, and you still probably have 1-2 brands which are pan-India, right? That is not what you see in your US or Europe. So there are trends to learn from and emulate. And there are a lot of things that are typical to India, which you don't see in the developed markets. So to answer the question, there's a yes and a no. And you need to know which ones to take.
You mentioned about spices which are locally producible, and hence there may not be pan-India brands. I mean, even the pan-India brands would try to procure them locally to suit the taste and preference of,
absolutely,
of this vast country.
Exactly. So your kitchen masala of Everest is very different in Kolkata versus the one that is sold in the South. Similarly, if you look at HUL's products today, I don't know if you all, read this recent or attended this recent presentation by Sanjeev Mehta, who happened to say the same thing. Their formulation of certain food categories, rather tea, I remember this. The same red label tea which is sold in the South is very different from the one that is sold in the North. Now in the US, HUL doesn't have to worry about these things. But in India, you have to worry about these things.
More complexities and more opportunities.
More complexities, but more complexity yields itself to so many other opportunities.
Yes. There's one question from Bhavik Jain, which has also been answered to some extent by you in greater detail, but I think this is indicating towards more technical as to in terms of valuation. And a lot of CAs in this forum are also valuation experts. They want to understand, as an investor, how do you value some of these companies from a technical point of view? Is it only DCF and multiple methods, or is there any other consideration besides the conviction, management, and market potential? But from a technical point of view,
I think there is, like I said, there is a science and an art to it, right? The science is all these various numbers and the structures that you would put in place, whether it is your discounted cash flow, whether it will be relative valuation at the end of it, whether it will be market multiples that you have given for comparable investments. These are some of the ways to look at it. But the art of all of it is, again, to be able to hang your hat on the assumptions that you take, right? Because at the end, you will know this very well, when even if you do your DCF, 90% of the value or 95% of the value is attributable to the terminal value. So the terminal value is so sensitive to that terminal growth rate. Now, you and I will never know what that growth rate is. So you have to be able to underwrite a lot of the growth parameters with the things that you have seen historically and to your ability to see what the future trends could be. And that's where the art comes into the picture.
Yes, very well explained, Rochelle. Very well explained. Pinky ji, are there any more questions that we may have missed for some reason? Or are we through? I think both the presentation and the Q&A session has been able to cover a lot of ideas and information about the PE sector and consumer sector in general. Pinky ji?
I know. Actually, I don't think any question is pending. You are moderating so well कि कोई question नहीं बचा है. But if anybody want to ask any question, they can raise your hand. I will allow them to speak. Otherwise, if there is no any question, we can end our session. So if there is any question, we will wait for 1 minute. Otherwise, we will close the session for today.
I think this session has left a lot of food for thought for us to go back to our home, think about it, and perhaps come up with more and more questions. But this would also trigger a lot of curiosity in the minds of the members, and I'm sure they'll want to read more and more about stuff.
Yeah, actually, what you explained now, that at our time we don't know about the PE.
Yeah.
We know only IPO and अरे ठीक है वो business start कर रहा है उसमें कुछ हमने investment कर दिया, but what the proper concept of PE, a structure concept, we didn't know that. So it's eye-opening session for all of us. What we can do as a retail investor or as a corporate investor, and how we can connect our client with a PE fund or like this.
Correct.
So I think it's a very good session. It was very good session for all. So now, if with your permission, Russell, we can end the session. If
Thank
there
you.
is no
Thank you
any
very much.
question.
I enjoyed
And
it very much as well.
yeah, thank you. Thank you for giving your email ID to all the members. So I think you will get lots of question on your email ID.
I may be delayed in my responses. I will be traveling for quite some time, but I'll make sure that I respond.
Yeah. So now I request CA Akshay Devra to give a formally vote of thanks to Russell, please. Akshay.
First of all, I would like to thank Murtuj Kajwala sir for joining us for this session and giving an excellent leadership to the Western India Regional Council. He is helping us in enhancing our skills related to technology as well as our knowledge to be able to do practice better. मैं पिंकी मैम का भी थैंक्स करना चाहता हूँ, केडिया मैम का. वो हर इवेंट में जो भी इंस्टीट्यूट का हो रहा है, कैपिटल मार्केट रिलेटेड भी कुछ हो उसके लिए जो मेहनत कर रहे हैं. जैसे रीजनल काउंसिल में भी एक अच्छा बड़ा टाइम दिया गया था कैपिटल मार्केट रिलेटेड डिस्कशन को. साथ ही में जो कंटिन्यूअसली वो यानी कॉन्फ्रेंसेस रख रहे. थैंक यू मैम, आप इतना टाइम निकाल के इसके लिए दे रहे हैं. आई वुड ऑल्सो लाइक टू थैंक सचिन भरतिया सर, जो घर की इमरजेंसी होते हुए भी यानी आए और जितना टाइम दे सके दिए उन्होंने. और रोशल मैम, थैंक यू वेरी मच, आपने भी आपका काफी टाइम दिया, गाइडेंस दिया. आपने जो भी कहा उससे हमको सही में फायदा होगा. और जो आप कह रहे थे बहुत सी चीजें हम खुद भी रिलेट कर पा रहे थे, जैसे कि डिजिटल ग्रोथ हो गई. साथ ही में आपने जो एक चीज बताई कि प्राइवेट इक्विटी इन्वेस्ट करते टाइम पे बिजनेस में क्या देखती है, शायद जो लोग शेयर मार्केट में इन्वेस्ट करते हैं खुद के इंडिविजुअल रिटेल लेवल पे भी वो ये 5 चीजें 6 चीजें देख के इन्वेस्ट कर सकते हैं. उनको इससे बेनिफिट जरूर मिलेगा. और जो सीए क्लाइंट्स के लिए फंडिंग ढूंढना चाह रहे हैं या इन्वेस्टर ढूंढना चाह रहे हैं, आपका गाइडेंस उनके लिए भी काम में आएगा और वो अब आपको डायरेक्ट कनेक्ट कर पाएंगे. सिर्फ आपके पास अब क्वेरी नहीं और 10 एक प्रपोजल तो आएंगे मैम ये लेक्चर के बाद. थैंक यू वेरी मच.
So that is my source. That is my source.
And on my part, I want to thank both the coordinators, C. Anshul Dhanuka and C. Akshay Devra, for coordinating so well, and they gave you their time for the capital market webinar. With their support only I can work. It's a teamwork only. Without team, alone I can't work. Agree, Russell?
Yes, absolutely. Absolutely. Thank you very much, and good evening.
Yeah, good evening. Thank you. Thank you all the participants to join and for patiently hearing. Thank you all.
Thank you.
Yeah.
Thank you so much. Thanks, everybody.
विनय जी क्लोज कर दीजिए.